Since 2010, Indonesia has emerged to be Asia's new darling for foreign companies trying to seek growth in the region. The country's population of 240 million people, with rising purchasing power, translates to huge domestic demand. Low labor costs and strategic location in Southeast Asia also form attractions for foreign investors. Within various studies we researched in Euromonitor, we have seen robust growth, particularly in FMCG. Industries such as packaged foods and beauty and personal care, for instance, have all been growing double-digit in value terms since 2010. Along with this, we also witnessed consumer goods giants such as P&G and L'Oreal expanding their production capacities in the country by building new factories. Despite all the attractions, big challenges remain for foreign investors. Poor infrastructure remains a big problem in the country due to the lack of investments in the sector. Lack of transparency and consistency within the government bodies also created inefficiency and prolonged the process for foreign companies to operate and execute their strategies. Slowing exports and rising imports created deficits and weakened its currency. So this, in addition to the recent cut on fuel price subsidy, actually drives price increase for most goods in the market and hampers the growth momentum of various industries. And now, in July 2014, the national election is right at the corner for Indonesians. After 10 years rule by the current president, Yudhoyono, who serves his last term in the office, this will mean a new era for the Indonesian government. At the moment, there are still a lot of ambiguity. The ruling party, PDI, the Democratic Party of Indonesia, has not actually decided on its candidate, although there are currently quite a few popular ones such as Jokowi from PDI and Prabowo from Gerindra. As in previous elections in the country, no one can actually predict how each of the candidates will shape the law until they take the office. One thing for sure, however, the new government is expected to prove themselves by putting in place a new set of laws, including economic policies. In short term, there will definitely some pullback from consumers to gauge against uncertainties and high inflation, at least temporarily. Government is expected to focus on political issues instead of economic issues. However, the overall market conditions in 2014 will not be hampered too much, since election actually was proven to improve the money circulation in the market as a result of the money poured in for campaigns. Providing there is no dramatic change, we expected that the economy will stabilize and domestic demand will return to strong growth. Japanese companies such as Suzuki and Honda have planned to launch their new plants this year and pledged to invest a total of $3.5 billion in the next 1 to 2 years. The latest news also comes from Foxconn, Apple supplier from Taiwan, with its $1 billion plan for Indonesia. So with all the challenges and uncertainties ahead, I still believe that Indonesia promises a huge growing market for those who understand how to navigate in the rough water. It is a high-risk, high-gain investment for foreign players.